All the crypto cards, at least on chain, that were calling themselves credit cards were functionally debit cards. And I thought that just made no sense. At Moto, we've actually invented a new financial primitive where you can truly fund your lifestyle through DeFi yield.
Shimon is the founder of Moto, and he joins Drew to break down the broken incentives of crypto payments, why taste is the ultimate moat, and why the future of finance looks more like Soho House than Coinbase.
You're going after the Amex luxury
Absolutely.
crowd. Like, speak about design and taste and how that impacts how you bring this something like this to market.
If you look at Amex's branding, it's geriatric. It's not actually being built for the next generation of wealth. Our generation does care about taste. It does care about aesthetics. And I am confident that that's a reason that we will stand out from the competition. I think you could also think of our initial launch as on-chain private banking.
Exclusive access, high stablecoin-based yield balances that pay off spending. Listen to the full episode on the future of luxury spending only on Stable Dash.
All right, we are here at Breakpoint 2025 for another exclusive interview. I'm so excited to be here with Shimon from Moto. Is this the first interview about Moto you've had?
You know, I think this is one of the first interviews I've ever done, period.
Oh my gosh, this is exciting. Brought Shimon in because personally I'm really excited. I saw this really interesting launch that you guys had just a couple weeks ago or last week. And so for me, our business, like we're just really passionate about payments, stablecoins, how the convergence of those things are bringing products to market like Moto and what's now possible in that space. So excited to dive in. Why don't we start with just your background? You've had a really interesting builder to founder phase. You know, what were you doing before? What were you working on stablecoin wise? And bring us into the journey of how Moto even became Moto in your mind.
Yeah, so I've been building on Solana since 2021. My first project was a collateralized debt position project, a CDP, like a stablecoin. It did not go well. I was 23 when I started it, and my co-founder is 21, and we raised a lot of money. Kind of made every mistake in the book. You know, we had Alameda and 3AC in our seed round, and at the time we thought we were gods, and then of course that wasn't good. 3AC was also our market maker, so you can imagine how that went. And so definitely kind of had a founder burnout after FTX, but I did bootstrap an alternative data firm called Fibonacci, which was focused on visualizing on-chain liquidity risk on Solana. And last year, Squads, which is the largest multi-sig on Solana, they raised their Series A, and I had built a strong name for myself in token economics and governance. And so they acqui-hired me from Fibonacci. So it was my first exit so far, and it was great to be with Squads. But when I joined Squads, I quickly realized that they were doing really exciting things on the frontiers of fintech. I talked to the CEO, Stepan, who, you know, I'm also very good friends with, and I kind of worked myself out of a job because I was like, you know, why are you focused on governance stuff? Because I was head of governance. I was supposed to build a governance platform. The fintech stuff is so much more exciting, and the market is so much bigger. It's, you know, you can really take over the world with fintech, whereas, you know, governance, you're kind of limited to whatever amount of governance tokens there are on Solana. So I played a role in shaping the early fintech strategy at Squads, and I went from head of governance to director of research. And yeah, it was a great gig. You know, I got paid to think for about half a year, but I definitely really missed being an operator. And also through my time at Squads and my research, I realized that there were aspects of this market, specifically consumer credit, that no one had figured out yet. As I started looking at the crypto card and payment landscape, it was very apparent that a lot of these, or all the crypto cards, at least on chain, that were calling themselves credit cards were functionally debit cards. And I thought that just made no sense. And from my understanding of the advancements of both of Solana's payment capabilities and also just fintech in general, and kind of the convergence of TradFi and on-chain markets, that this is totally an addressable issue. And so in April this year, I left Squads with Squads' blessings, you know, that's all good, and went all in on Moto. So I gave up a pretty sweet gig, but I'm very happy with where we're at right now and very excited to tell you a little bit more about what Moto is, what makes it different, and why we think it's worth building.
Dive a little bit deeper. I wanted to ask you about the on-chain credit cards that are functionally acting as debit cards. Like, what does that mean? And maybe if you could break down a little bit of the different infrastructure providers or usual suspects in that flow. What do you mean when you say that? What's actually happening on chain behind the scenes here, different than what you're building with Moto?
Yeah, that's a great question. So I'll make a distinction between on-chain crypto cards and centralized exchange crypto cards, because centralized exchange crypto cards like, Coinbase or Gemini, these are actual credit cards where you have to go through, your credit score is checked, it's under collateralized or uncollateralized rather, and there's a variable interest on it. So these are just, normal credit cards that maybe give you some crypto rewards or something like this.
Instead of it being your Southwest Chase or, airline cards, Gemini and Coinbase filling that gap, but it's like a traditional credit card program.
Yeah, it's like a traditional credit card program, but instead of, airline miles, you're earning maybe Bitcoin or XRP or Solana, right? There's a lot of options that these centralized exchanges give you, but they're just credit cards. Now, on the on-chain side, there are a few providers. The biggest one, of course, is Rain, and Rain is also our card issuer. And what's happening under the hood is that if you have a wallet that has, let's say, a stablecoin balance, there's kind of two flavors to on-chain cards. So flavor one is you're spending directly from a balance. So if you have 1,000 USDC in your wallets and you use a credit card from Rain, at point of sale, if you spend $100, 100 USDC is actually taken from your wallet and your balance would say 900, right? And so that's, even if it says it's a credit card, it's a debit card. There are other permutations of this. A lot of them are popping up on Solana. And I think, probably the most famous one in general is EtherFi. And these are loan cards. So you can use, alternative collateral, like let's say Bitcoin or ETH or Solana. And at point of sale, instead of converting the Solana to USDC and having that be debited, what they do is they give you a loan of USDC and then you pay with that loan. But the thing about this model is that it's extremely inefficient because you're actually going into debt every single time that you spend. And there's a variable interest on the debt that's usually dictated by the underlying lending protocol, whether on Solana, whether that's Camino or, Drift or whatever it may be.
And that's happening on a payment by payment basis. Like if I want to go buy a sweatshirt for $50, like that $50 in USDC is now technically on a payment by payment basis happening on a loan with
Yes,
loans?
That's correct. So it's like, let's say you have $1,000 worth of Bitcoin, right? And you want to buy, I don't know, a $50 lunch. What these wallets will do under the hood is they'll take a 50 USDC loan against your Bitcoin collateral. And so, of course, there's different LTVs and all that. But then when you spend, that 50 USDC is immediately debited, right? And so what that means is when you're actually going into debt every single time that you spend. And of course, if you want to get your collateral back, you need to top up your wallet with the 50 USDC that you just spent, which is kind of a hassle. And of course, there are liquidation risks and all that as well. So with under the hood, not a lot of people know this, but under the hood, what's really happening, let's say if you're using Rain, is that Rain is actually borrowing from credit facilities in stablecoins to settle with Visa at point of sale. So basically, we saw what Rain was doing, and we were like, why don't we build this on top of Rain? What we do is Rain settles directly with Visa. We settle directly with Rain. And at Moto, when you make a transaction, we front the transaction for you. And we have a smart contract that guarantees that you pay us back at the end of every 30 days. And instead of taking a loan against your collateral is earning interest throughout the 30-day period. And if you come in with enough size into Moto, we've actually invented a new financial primitive where you can truly fund your lifestyle through DeFi yield. You can offset thousands and thousands of dollars of monthly spending through gaining yield through the 30-day period, whereas with other cards, you're either going into debt or you're being debited immediately. And, of course, we have plans for next year to get even beyond this collateralized model, because we are still a collateralized model. The difference is that we are not a debit card. So if you have $1,000 on a Moto card and you spend $1,000, you will still see $1,000 on your wallet earning yield through those 30 days until the 30-day period is over, and then we debit it.
Really, really sweet. Talk a bit about the differences of this model. It sounds like when we were speaking before, this prepaid flavor or formula that is how you've architected this, or might be thinking about it in this way of like prepaid cards. Speak a bit about like traditionally, I think you said Europe is a more common place in the world where this is happening. Like, what traditional models or parts of the world are doing this? Because I think for Americans or those of us in the US, we may not be as familiar with how popular this model might be in other places.
Yeah, that's a great question. It's interesting. The aha moment for Moto was actually based on a very popular form of credit card in the US, which are called charge cards. And charge cards are, I think 30 million Americans or something have them. And I think Chime is the biggest provider. And charge cards are a way for people to build up credit. And so the way that it works is that bank will issue a credit card. Every time that you spend, they put in what's known as an ACH hold on your balance, and you have to pay at the end of the month. And this builds up your credit. So it's like a debit card, which is kind of like what we are too, except that you're debited 30 days later. So there is an analog in the US, but you're right. It's actually, the infatuation and crazy credit card debt that America is in, or the US is in, it's almost indigenous to the US, because no one else in the world really wants to underwrite under-collateralized or uncollateralized loans to consumers. So, for instance, in Europe, even American Express, you have to pay them back at the end of every 30 days. So they don't necessarily need to know that you have a balance that will give you this credit line or whatever, right? Like, you could theoretically spend $50K with only $1,000 in your bank account, but you better pay them that $50K at the end of the month, or you're pretty much going to jail. So this model of having a credit card that you have to pay back at the end of the month is very common outside of the US. And what's also cool about Moto is that both in the US and out of the US, we're one of the only ways to get a premier credit card that's functionally a credit card without a traditional credit score. So we give you a one-to-one credit line to whatever your dollar balance is with us. And we also abstract this so that our users don't necessarily need to even know what stablecoins are. They can make on-ramp with Apple Pay and off-ramp to their bank accounts, of course with stablecoins as well. So the model is quite popular, but no one has done it for whatever reason. And I'm glad no one has done it so far, because otherwise I wouldn't be building Moto. But yeah, there's definitely analogs in the traditional credit card world. And in the future, we think there are opportunities to really push this space and go uncollateralized.
It's really cool. So in summary here, Moto is effectively bringing a very unique, more credit feeling experience to the on-chain markets. That's very different than these traditional Gemini, Coinbase, which are just traditional credit programs. This is truly a really different, unique approach to on-chain capital credit for consumers, but it's not, in my sense, it seems way more approachable and in some ways lower risk or safer than just continuing to add more fuel to the existing debt problem in America, because how you've set it up is that you need to deposit first capital and then use that as the offset for, if I have capital to do this, I'll put $1,000, $10,000, $100,000 in. And then you're saying the yield and the earnings from that collateral essentially is used to hopefully in some of these cases cover all of the spending for these. And that's in the people's minds, even just how you framed it of like the yield. Because if it's framed as a savings and earning product, which I think a lot of companies are doing, there are a lot of like neobanks and savings focused on-chain apps that are coming up, but they're really focused on earning. I love how you have framed what might look similar on the back end of using stablecoins and earning on them to not make it about the earning necessarily, which is interesting, but make it about how that can offset spending. I think just psychologically, that is a really powerful frame shift. Is any part about that you would want to refine or build on, or anything that I said that might not be true in how you think about it?
Oh, you put it very well. I think that I think what we're building is a better model indeed for building and preserving wealth than traditional credit cards as well. And you're absolutely right that in the US, these markets kind of thrive on the destitute or people who can't afford the credit cards, right? And it's a really
Predatory industry.
very extremely predatory market. And I would also say that a lot of these other crypto cards, especially those that are on chain, I would say they're quite predatory as well because they tend to add a lot of fees that don't necessarily need to be there because and I just wrote about this on my X. There's just not a lot of money in crypto cards because you have to share the interchange with Rain and Visa, right? And so, or whatever your issuer is, right? So you can't really make a lot of money from spending. So, you add FX fees, you add on and off ramp fees, right? There's a lot of yield in DeFi that's extremely safe and beats market rates, right? And so our attitude at Moto is let's pass all the yield or most of the yield back to our users and actually fund a rewards program using just more capital efficient mechanisms, which will allow us to beat everyone on how we can reward our users. So Moto will give 5% cash back against all tiers, and you can earn up to 5% interest as well. So you're absolutely right. You can offset all of your monthly spending, fund your lifestyle through Moto, and it's a new financial primitive that is designed to build wealth, not get you.
So it's effectively 10%, and you're splitting it down the middle there, if I'm understanding it. 5%, I know these numbers you can't confirm or promise anything, but roughly that's the breakdown is like 5% back toward offsetting and then 5% going toward earning and saving, essentially.
That's correct. Of course, there are limits to how much cash back we can afford to give you, but we are beating the market rate. So I believe that EtherFi before Moto is the leader. You can earn up to $1,000 in cash back. And I think they have 10% cash back, but it's just based on spending volume, right? And with us, it's 5% cash back, but you can earn up to 1,200 per month. And then beyond that, you can earn up to 5% interest on all of your deposits. And so our North Star is assets under management, AUM. That's how we make our money. So we only make money when our users make money. We don't take fees from them or add fees because, in my opinion, a lot of these crypto card companies they don't know how to run a business. And they don't know how to align incentives with their users. And we're really trying to do that. But yes, effectively, it's like 10%, like you're saying, split between the middle with probably a little bit more bias to the interest rates you get from depositing into us.
Talk a little bit about more of the AUM side of how you make money, the stablecoin strategy for you guys, how the stablecoin with Moto or your own stablecoin fits into how you're thinking about monetization, and the role of what a stablecoin means in the context of Moto?
Yeah, that's a great question. So all stablecoin deposits or deposits into Moto are automatically converted into a delta neutral yield bearing stablecoin, which currently is powered by a protocol called Reflect on Solana. They're backed by Andreessen Horowitz. And what I really like about Reflect is that they are insured. And so they use restaking to ensure the principal. And effectively, it means that we're offering not only a high interest savings account with a credit card. It's some analog to FDIC insurance where, you can really sleep well at night knowing that your capital will be preserved. And that's kind of our approach to diversifying yield as well. Of course, down the line, we're very likely to have additional partners besides Reflect. But our priority as a former DeFi guy from Solana, and just if you've been in DeFi a long time, there's no such thing as a risk-free asset, right? So many things can go wrong, right? So really focusing on making sure that we can, with our partners, cover the principal of all of our balances while still generating yield. That's really important. And so the only fee that Moto really takes is on AUM. So it's our goal to get the users as much yield as safely as possible so that we can kind of skim off the top. And, we're aiming to make something like, between 2 to 5% APY in total across all deposits. And that's our business model. And in return, our users get this really exciting rewarding credit card. It's a Visa Infinite card. And, I think you've seen the design. It looks really beautiful.
It's awesome.
Yeah, we have a lot of emphasis on that. And, maybe we can touch on that as well. But yeah, that's
what role does design? You're going after the Amex luxury crowd. Like, speak about design and taste and how that impacts how you bring something like this to market, which also I think for me, as I look at Moto and the launch that you've had, the approach you've had seems like a breath of fresh air. There are not many other companies that I've seen having this level of taste. I mean, even the way that you present yourself and just like the vibe, it's so good. And I think matters to people who you might be going after on the user side. So speak a little bit,
Appreciate the compliment, first of all. Thank you. And in terms of taste, I'm very, very grateful for my time at Squads. I would argue, Squads is open source, right? Or most of the programs are open source. So you could very easily spin up a Squads clone if you wanted to. I would argue that the reason that Squads and all of their products are so dominant is because of their aesthetics and their laser focus on making crypto or DeFi genuinely a pleasure to use, right? So I'll definitely shill them, but it's like the Fuse wallet, I think, just won the Expo Award this year for the best designed app in the world, right?
It's gorgeous.
Yeah, it's gorgeous, right? And so I learned a lot from them. And with that being said, I do think that a lot of these crypto cards can't look beyond crypto. And you can really see that in their branding, their positioning, their user experience, right? It's all stablecoins or it's all ETH, Bitcoin,
even the way the websites or like the value add to the user is like very crypto forward, which is inherently limiting, in my opinion, to a crypto native audience. Like if you're saying that the main value of your business is some sort of crypto native jargon thing, you're cutting off and making that product completely inaccessible or irrelevant to anyone who doesn't come from this industry, which is, I think, so limiting in some of these programs I've seen, is the way that they even position what they're doing.
Yeah, it's absolutely true. I think crypto, not to be crude, but it really needs to get over its circle jerking phase
it's
where,
not just the card space either.
No, it's just crypto, right? It's like we're not actually going to change the world if every user needs to bridge from 5 chains and needs to, go on to DEX and swap their USD XLP into, whatever, right? It's just not going to be functional. So with Moto, we're really trying to focus on the tangible benefits that DeFi can give. And so actually capture a market beyond crypto users so I wouldn't say that our competitor are crypto cards like Cast or EtherFi. I would say that we're going head to head with Amex. I believe that if you look at Amex's branding, if you go onto their website, it's geriatric. It's just from a different time. I think most of their clientele are at this point, 60 plus, right? And it's, Amex is cool, but it's almost like an old money coolness where it's not actually being built for the next generation of wealth. And so with Moto, from everything from our aesthetics to the rewards that we give outside of, just cash back as well, there's a lot of benefits to the Moto card. It's really focused on what does the next era of consumer luxury look like? And I think it's really shifting. And I think that our generation does care about taste. It does care about aesthetics. And I am confident that that's a reason that we will stand out from the competition and also why we will be able to bridge beyond Web3 into just being known as a very rewarding credit card.
Last question here as we wrap up. I'm so inspired by what you're building. As someone who's built, Stable Dash for us, stablecoins have always been the core focus. How do they come to life in these different businesses? I think 2026 and into the future, hopefully, we're going to start to see more of these Moto-like companies that are using stablecoin as core infrastructure that are just making their businesses perform better, give better experiences, and actually do it in a way that feels more traditional or fintechy versus I think what I've seen historically in recent years is just very crypto native feeling products and go to markets. And so just continue to be inspired by what you're building. Last question for you, just as we close, how are you achieving on the go to market side? Just with that being said, I'm imagining this go to market. And when you think about a user base here, when you think about growth, what's the approach that you're taking in terms of getting what I'd imagine to be some crypto natives involved, but probably more so over time, non-crypto natives involved. How are you reaching them? How are you getting them to care or know about something like Moto, to resonate with this problem or opportunity that you guys hit on? Speak a little bit on that.
Yeah, it's a very good question as well. I think that a big mistake that most crypto cards have made as well with go-to-market is that they kind of just, will slap 10 different tiers of cards, right? They'll say, here's our starter card, and here's our middle card, and here's our elite card, and here's our super elite card, Cast has like I think 7 different tiers. And of course it goes all the way to their solid gold card, right? If I were Cast, if I was Cast, I would have just focused on the gold card. I think that diversifying your target audience in the beginning is a very risky thing, because you also have to ensure that the user depositing $100 into your app gets the exact same level of service as the person who's willing to deposit millions, right? And so we're taking a very curated and tailored approach to growth, where of course we are starting with a very healthy and strong network of crypto whales that are excited about this offering, that are not satisfied with what they're getting from everyone else. And then from there, it'll be a very lucrative referral campaign, right? Where users can earn half the fees for a year that we would otherwise make. Yeah, we're really trying to be generous in the beginning, right? I think it's really, we're trying to go for the if you know, you know. The nice thing about a business like Moto is we can be a very, very successful business with just 1,000 users, as long as they are the right users. And so for us, just ensuring that quality is our priority from day one, and growing and scaling at a pace where we can guarantee that quality, we think that is going to just spill over, and we've already seen it, into massive FOMO for those that don't have the card yet, right? I would also argue that it's possible to go from exclusive to semi-exclusive. I think it's very difficult to go from general access to exclusive. And I think a very good case study of this is Revolut, which Revolut is now trying to push out more luxury cards, both on the business and consumer side. But their consumer offering is so good when it's free already that it's much harder for them to convince people to take that jump, right? Whereas if you just focus on exclusivity in the beginning, then over time you can make it more general access. So very much the Raya, Soho House playbook for us, like curation over vanity metrics of growth, right? Like we don't need 5,000 users. In fact, we're probably going to be rolling out to just 50 select users in the next few months, really getting feedback from them of how we can make the card even better, and then starting to scale it out and making it more accessible.
And is the main metric of exclusivity today focused on essentially the deposit in experience, like making sure that it's more valuable for you to have in this specific point a couple users that can deposit 6 figures into it versus like 10 times as many or 100 times as many users who are just putting in 100? Like, is that what you mean by that?
Yeah, absolutely. I think that if you look at the credit space, the on-chain credit space, there are a few players that are emerging that are kind of focused on the unbanked or microloans, So I think Divine on Coin or WorldPay is a great example of that, where I think you can get up to $1,000 with no credit check, right? And these are really interesting models, but they require you to penetrate unbanked markets at such a massive scale, right? And unless you have some kind of edge there, I think it's a very difficult thing to do, right? I mean, by definition, if you're trying to make money on the unbanked, right, you better get a lot of them, right? No one has really gone all in on consumer credit for people who have wealth, right? And I would argue, even if you look at traditional credit cards or even private banks that are out there, they're also extremely predatory, right? So I think you could also think of our initial launch as on-chain private banking, although people get confused by that with like ZK stuff. That's not what we mean by private, but that relationship with someone where you are their gateway to their life, right? Because if you become their card of choice, you're actually facilitating their lifestyle. And we believe that Moto is the best way to facilitate these types of lifestyles through capital efficiency, which allows us to be so rewarding to our users. I think that exclusivity is a very difficult thing to nail. And of course, we're doing our best. But I do think it has a lot to do with a combination of aesthetics, listening to users, and giving them the experiences that they want. And I think you see that with a lot of credit cards, right? Like Amex is now doing more hyper-localized rewards. And that's very much our approach as well, right? So if we can get, 1,000 happy users that come in with some size, we're a very happy business. And of course, that's a very conservative goal.
Beautiful place to end. Thank you for the time. That was our exclusive conversation with Shimon from Moto, live at Solana